Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So yesterday was a dramatic action. Mostly the Bank of Canada has confused all the plans on the markets by the rate increase, and this rate increase has shaken the yields of the bonds in the United States and Europe. And you can know probably that the gold market very sensitive to the yield, especially in the short-term bonds, and that has led to some more volatility on the market. So that's why actually we got mixed results in our yesterday's pattern. But let's go step by step from the current situation. On the daily chart, as you can see, market is continuing some attempts to show upward retracement, but these attempts looks really not impressive. So very shy retracement stance. Current action on Thursday stands inside of the previous session. Here's where some kind of the high wave, maybe not. Not really. It takes the shape of the high wave, but the shadows is not really significant. So anyway, our price right now stands at as inside session. But what we are really interesting on the daily setup is that possible bearish grabber that could be formed here. If market will form the bearish grabber today, this market will close somewhere in the same point where it stands right now. It will mean and suggest that market is ready to drop below these lows. This will be very important. Overall action here, guys, that we see doesn't show any signs of the thrusting action. It mostly looks some kind of this flag or some consolidation here. We did not see something of that sort. Some accelerations, minor retracement, long candle, minor retracement, long candle. And here is just some standing around the same areas that was achieved even 2 weeks ago, probably. So actually, market stands in the shadow, in the range in the shadow of this drop that we've got last week on Friday. As you can see, market stands really flat. On the 4-hour time frame chart, our setup with the harmonic sessions are harmonic swings still the same. So here, as you can see, market has completed $80 retracement, and also it has reached the upper border of this channel. So nothing drastic has happened here yet. I was suggesting that probably market could drop further, and it's still valid. It probably could happen, especially if we will get the grabber on the daily chart. But still, as I will show you right now on the hourly chart, overall setup looks not as cloudless as it seems on the daily, because here some moments exist that are not really good for immediate taking the short position. So take a look at our yesterday Garden's triple to sell. Actually, it has started very well, and even minor target has been achieved. The freight retracement of this upward action, it's minimum target of the Garden's triple 2, as well as a butterfly. But later, when the rate has been rising in the Bank of Canada, as you can see, this really fast acceleration has happened. Also, some dovish comments from the Yellen. This brings more support to the bullish side. It has led to some volatility on the market. At the same time, as you can see, even with this upward action, market has not exceeded this invalidation point of our pattern, still forming some scoring around. What we see right now on the hourly chart. First of all, take a look. The market has returned above the weekly pivot point and entered in the same consolidation that was previously broken. So you can see it was support line, silver thick line, support, breakout, was resistance. Market starts dropping, but later fundamental events has happened. The market returns right back up inside of this consolidation. This is in general bullish sign, guys. That's why I think it's better to wait for more clarity before you will take in the short position. At least wait for a pairing of the grabber. Maybe some bearish patterns will be formed here. As a result, market has completed 1618 extension of this head and shoulders, minor head and shoulders pattern that has been formed as a starting pattern for its upward bounce. As now, as market stands in this area, we could keep an eye on the larger patterns. You can see here Also exists some sign on the hand shoulder, so this could become left shoulder, head. This market could start to form right shoulder. Whether it will work or not, it's a difficult question, but chances that market could fail here is also exist because we here could get the grabber. If it will happen, watch for bearish patterns that could be formed here, and if market will drop down again below the support line, will drop out from this range and start to move down, this will be the sign that probably no other retracement will happen. The market is ready to drop down to the next target that we have approximately around 1190 area. That is a bit tricky situation right now on the gold market, but we have discussed the major moments to watch for. So first of all, on the hourly chart, this will be drop here, downward continuation, drop out from this consolidation and start to move down. If you will see that definitely snow shoulder is forming here, market is dropping too low. Second is appearing on the daily chart by today close the grabber. If these two patterns will be completed, market indeed will start move down on the hourly chart. That will be the chance to go short because next destination point will be 1188 support. It's really very good, nice potential here, guys. It's possible moving. So that's why I think that the gold market is worth of our attention, because here's very soon we could get the clue what to do next.